What's up, y'all? So this is how you could have caught 80 points on the NASDAQ today by using the weekly profiles. So I have here pulled up a 1 hour chart of the NASDAQ futures. So on every day, I've delineated where the true day open was. So you can see this week, the week of February 10th, we had Monday's daily open here. We had Tuesday's daily open here, the true day open. Wednesday's true day open here, and Thursday's true day open here, right? And so essentially each day of the week has been delineated by these vertical lines. So the first thing I want to point out here is that we have these relative equal highs that were resting above us going into trading today, right? So these highs were way too smooth, right? And one thing that you have to know about the market is that smooth edges always want to be made rough, right? So anytime you see highs like this that are just way too smooth, way too perfect, that's a setup for a draw on liquidity. So going into today and really this week, honestly, that should be your draw on liquidity, right? So the first thing I want to point out here is where did we open on the week, right? And so that's going to be Monday's true day open, right? At 12 a.m. midnight New York Eastern time, which is here at 21,684. So I'll go ahead and mark that here and drag that across. So we'll mark this level as our true day open, right, on the week. So very important to note this going into trading really every day of the week, being aware of where that level is. Another thing I want to point out is that we also had some buy side liquidity resting here, which was taken on Wednesday. What is most important to point out and notice with this profile is what happened each day of the week. So on Monday, you can see the market opened and we kind of just consolidated, right? We did have this move higher, but we pulled back into this range and we didn't really do much, right? On the week, we stayed inside of this hourly SIBI right here, this sell side imbalance, buy side inefficiency, fair value gap from Friday, right? There was a huge sell off Friday. So we kind of just stayed inside of this range. And then Tuesday, it was a little more the same. We pulled back into the Monday or weekly true day open. And then we kind of rallied higher, but we didn't quite take that buy side out. And then we just kind of chopped around going into Wednesday. So going into Wednesday, we had economic data, and this is what our economic data looked like each day of the week. You can see Monday, there was really nothing. Tuesday, there was nothing as well. Wednesday, we had CPI, right, which is generally a very volatile piece of economic data that came out at 8:30 a.m. Eastern. Then we also had PPI Thursday today, and tomorrow, Friday, we have additional red folder data in the form of retail sales. So it's very important to pay attention to what your economic data is for the week, because generally your weekly profile will be based on what the economic data looks like, right? And all you really need to pay attention to is red folder data and what days of the week we have red folder data, because the market generally tends to expand, contract, manipulate, accumulate based off of the days that we have certain economic data. So you can see Monday and Tuesday, there was no economic data. What happened on Monday and Tuesday this week? Consolidation, right? We didn't really get any huge price moves. Wednesday, we had the CPI data that came out, which I just showed you, right? And so on that CPI data, what happened? We came down and manipulated these equal lows here, right? Or this low here from Tuesday, right? We manipulated down right at 8 a.m. and then we came right back into our range. So that is classic manipulation, right? Accumulation, manipulation, and what comes after that, it's distribution, right? And so we had this change in state and delivery here, right? That validated that this was just a manipulation move, right? Because if this was truly to go down lower, we would have respected this sell side imbalance, buy side inefficiency that was formed here when this data did come out. Right, so we manipulated higher, and then we took out this buy side, or sorry, we distributed higher, and then we took out this buy side liquidity from these equal highs on Monday and Tuesday, right? So now, like I said, accumulation, manipulation, what comes next is always going to be distribution, right? So going into today on Thursday, you should have been expecting to see higher prices because we had previously manipulated lower the previous day into our drawn liquidity for the week, which was this buy side liquidity that was resting above us in the form of equal highs that I had just pointed out, right? So now, how could you have caught this move today? Well, today, like I said, we had economic data at 10 a.m. So you should be expecting the big move to be coming sometime in the 10 a.m. Hourly candle, right? So you can see going into 10 a.m. and 9 a.m., we did have these two imbalances that were created here, right? After we took these two highs, we did form these bearish fair value gaps, and you can see they were immediately inverted, right? This one got immediately inverted, right? It's a very small one, but you can see it was immediately inverted, right? So that told us that we were, if this was truly bullish, we would have respected, bearish, we would have respected this, right? And we were practically already about to invert this larger one here, right? So you can see order flow was very much still bullish. And then we also did manipulate internally and take this low from Wednesday's previous session. So what you want to see is you want to be able to set up this same model on the larger time frame on the lower time frame, right? So I want to see this same manipulation. I want to see the same accumulation, manipulation, and distribution on the lower time frame, right? That's essentially what you're looking for when you're trading. You want to find a model within a model, right? So on the hourly, we do come down and sweep this low, and I can drop down to a 1 minute chart, and we can kind of see what this really looked like going into trading today. So go ahead and remove this. We inverted that, and you can see we had PPI data today at 8:30 a.m. That PPI data formed these equal lows here, right? Which I was potentially watching for the market to come and manipulate these lows, but it didn't necessarily need to, right? Because we also formed lows here as well, right? So that was our internal sell side liquidity. Like I said, if I'm expecting higher prices because I'm bullish on the week, I want to see some accumulation, manipulation lower, and then distribution higher on the lower time frames as well. And that's how you want to trade, aligning your models on each time frame. So you can see we had this buy side liquidity, which was resting here, right, going into the day. And then we also had this buy side liquidity, which was from overnight session, right, resting here. This was Asia highs, resting above us. So going into the 9 a.m. hour, the market kind of consolidated, and we continue to generate liquidity. And that's really what you want to see, right? We're generating more liquidity to be taken at some point, right? So the market does open here at 9:30. And as soon as we open, we run higher, right? And we take these highs here, right? Those overnight highs from that were resting above us from Asia session. We come and take those highs, and we immediately trade back down, right? So that's how you know this was just a manipulation move to come higher, just to come lower, right? And generally the market will do that. And that's why you have to be very, very patient. A lot of retail traders were chasing this move. They were chasing this move up as soon as the market opened. And now that's just a perfect opportunity for them to be faded. So the market runs up, we come back down, manipulate these internal lows here, right? Trade into this 1 minute imbalance, right? Right into the consequent encroachment. This was that 1 minute imbalance from the PPI or CPI data that was created this morning, right? So we trade back down into there, and you can see now we have these imbalances here. Now, in order for me to validate a long entry, I need to see the same thing, right? There's accumulation, here's the manipulation. Now I want to see distribution. What validates distribution? Well, I want to see, number one, some fair value gaps start to get inverted, right? I want to see fair value gaps start to become inversion fair value gaps. So we have this SIBI here, right? Once I'm watching for this SIBI to be inverted and for us to have a change in state and delivery, which essentially means our order flow now is going to change from bearish to bullish order flow. We're bullish on the higher time frame. Now I want to see us bullish on the lower time frame, right? So once we validate this fair value gap here, that is essentially the market saying, okay, order flow is changing, right? And now I want to see that hold. We do have the 950 to 1010 macro coming up, right? So I'm not looking to take a trade until the macro starts at between 950 to 1010. So, right, we invert this fair value gap, pull back into, right, this BISI here, and you can see we hold it perfectly. We don't invert it. We pull back into this initial BISI as well, right? And we continue to then trade higher. We invert this fair value gap, right? And now we invert this fair value gap as well. So now we're inverting multiple fair value gaps. Now we're in the macro. It's 9 o'clock, and we've officially formed this change of state of delivery here, right? In fact, it actually is better. If we look at it on the 2-minute, you can see it a little more clearly. I'll take this off. You can see we've inverted this fair value gap. Now, once we get a close above this down close candle, that is now officially our change of state of delivery, right? So this change of state of delivery is what validates now that we are officially long, right? We're officially in bullish order flow. Now, where can the market go? Well, we have liquidity that's here, and we have liquidity above us here. So generally, I don't want to see this high because that is my week. Those were those equal highs on the weekly. I don't want to see those highs taken out right before I get my entry. So the market does end up rallying. You could have taken your first entry here, but if you missed it, generally speaking, if you missed this entry, there's usually another one coming because this generally is not what the market would consider a retest. Usually what I like to consider a retest is when the market rallies and then we come back and retest it. So you can see we do rally higher. We take out this liquidity here from the opening bell. And then we do come back lower, right? And you can see we do end up missing this high here. So our draw on liquidity was still valid, right? And so what would have been the best entry here is with our limit order placed here, stop loss, probably below this low, right? Because now this should be protected lows, targeting this internal liquidity that was resting here, right, for 80 points, right? And now we want to see the market respecting our bullish PD arrays, right? Our bullish discount arrays, right? So what discount arrays do we have? Well, we have this fair value gap, right? I want to see the market respect that, which you can see we come all the way down here, but we close right back inside of this fair value gap, right? We did not invert it. That's perfect delivery, right? Very algorithmic. This one was respected as well. So you could have taken your entry here, right? We're really down here, but you know, it won't let me show you that here. Stop loss below this low, entry down here, right? Targeting internal liquidity here. Or those equal highs that we had on the higher time frame there. And then ultimately, you know, you want to see us continue to respect these bullish discount arrays, right? And we want to invert these SIBIs, right? So that SIBI, I want to see that get inverted. Ultimately, we do get some bullish delivery here. We form this propulsion block here, which now I want to see the market respect and us hold that, right? And so at that point, you can move your stop loss higher, right? Because we shouldn't come back down here to break even. And then ultimately we do get delivery right through that high, and you could have taken your profits there for about 80 points on the NASDAQ from this order block up to that high, right? And that is how you line up your models, right? You're lining up your higher time frame with your lower time frame and waiting. The key is waiting and waiting for the high impact news delivery days. Those days are when you're going to truly get the best setups, right? And that's hard for a lot of traders because there's going to be some days like Monday and Tuesday this week, right? If we look back at that hourly chart, Monday and Tuesday would have been a day you don't take a trade, right? No economic data. You know, the market is just generating liquidity on the higher time frames to later manipulate it on Wednesday and ultimately now what? Distribute on Thursday and also Friday. So going into tomorrow, I'm expecting potentially more distribution if we do form some bullish fair value gaps here. Now, what could have been another entry here, right? We do have this change of state of delivery from Wednesday, right? We pull back, sweep this low, distribute higher. Now, these series of down close candles here ultimately forms an order block, right? So now that could have been a great entry on a pullback, right? So when does the market pull back? Well, we pull back here going into the 12 p.m. hour. You can see that the market does kind of consolidate here, and then we come lower and retest this change in state of delivery here, right? We retest this change in state of delivery, right? So if you miss that initial move in the morning targeting this draw on liquidity here, right, because we're still distributing on the larger time frame, we expect this to continue to expand higher. Where can it expand? Well, we could potentially expand into these highs, right? If we're still distributing and we're in a buy program on the larger time frame, need to find where are the highs on the larger time frame. Well, those relative equal highs could definitely be a target, right? So going back to the lower time frame, we had this discount array here that we pull back into, right? And so now if we look on the lower time frame, where could have been the best entry? Well, for me, let's look at a 2-minute chart. You can see when we pull back into this hourly change in state of delivery, this was just manipulation of these lows, right? These internal lows, which were formed this afternoon, we come back, pull back into that, right? We form this bearish fair value gap, which we do ultimately end up inverting, right? It's a SIBI here. We do invert that, right? Then we form this change in state of delivery, right? So once we get a close above here, now we want to take an entry pulled when we pull back into some sort of discount right here. So to me, the best entry would have probably been taking this inversion here, right? With my stop loss probably below this low. Now, granted, that might be a little high of a stop loss, but remember your target on this trade would have been those equal highs, which were resting here, right? So you see, you would have got that entry here, right at 140, right? And then ultimately we do get the new macro open here at 150, right? So the new macro opens at 150. We pull back into this inversion once again, and then we get smooth delivery right into these highs, and ultimately our drawn liquidity at the ultimate high here. So you could have seen that would have been a pretty long hold, but ultimately you do get that delivery through these highs into the afternoon and at the closing bell. So that is how, again, you're lining up your higher time frame with the lower time frame, right? Accumulation, manipulation, distribution, right? Now, going into tomorrow, Friday, I would expect to see maybe this fair value gap get traded into, and then we expand potentially higher if we don't ultimately come back into this range, right? You want to see what is the market showing in the morning going into the data, right? If we're holding bullish PD arrays after the data, that is a very strong sign that we will continue higher going into tomorrow. So that's how you line up your weekly, use your weekly profile to take the highest probability trades, lining up your economic data, looking to see which PD arrays the market is respecting and disrespecting. All these things you should be taking into consideration going into every single trading day, right? And this is why they say that you shouldn't trade every single day, because every single day is not high probability. Monday wasn't, Tuesday wasn't, Wednesday could have been, maybe, but Thursday and Friday were the highest probability days of this week. We'll see how tomorrow holds going into the data, but I expect it to be a pretty good session to end out the week tomorrow. So that's all I got for y'all in this one. I will see y'all in the next one.